Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. It's slow. It is slow out there. Just making sure everybody knows where we're at and that we're getting started. So I was just noticing that the U.S. dollar Canadian is nearing its lows of the session. Now, this is ahead of the Bank of Canada. So just keep that in mind. Let's take a look at the U.S. dollar Canadian. Like I mentioned during the webinar, this is like mid-range, and one of the things I think we should also note, this is the level from the 2017 lows, right? So we're basically, I mean, the dollar Canadian is looking for a breakout. That's all there is to it. So. And we'll have to note the levels. I think the risk is, and I know I said this during our webinar, and we have to stay bearish while we're below 121.50. The one thing that I said during the webinar, and I'm going to reiterate it again, is that I think the Bank of Canada is going to reference weakness, or strength in the Canadian currency. So they're going to try to talk it down a little bit. I don't know who I'm sorry. I don't know if the dollar is going to care much about that, if the dollar Canadian is going to care much about, the BOC comments, because it hasn't in the past. And over the last few months, every time the Bank of Canada mentions, oh, hey, we got strong currency, I mean, they just, the market just brushes it off. So will it matter this time? Probably not. So let's just know that we are, right here, and that we have to get a daily close above 121.50 in order for anybody to even think twice about dollar Canadian strength. Okay. But we, like I said, we, sorry, I blocked somebody, like some goober on, and if you guys are on Twitter, this bozo here, let me just show Dinesh Yadav. He made some comment about, it's probably about Dale, when Dale starts the webinar in the morning, and Dale's, he'll just kind of like talk about some other things for a little bit before he gets in the markets. Like somebody commented about that, said, I only listened a few minutes, and I'm like, man, whatever. So I blocked him. No. Anyway, you guys should comment to him. No one needs that negativity. And that's what we pointed out in the chat room. It's like, who needs that negativity around us? When you're trading the markets, no one, not a person. Anyway, let's go back to the charts. Yeah. Free webinar. There we go. There we go. Free webinar, refund form required. That was from Simon. Becky says, oh, there's 2 real winners on YouTube channel in the morning. Always negative on Dale. I know. It's like, dude, like seriously. Anyway, all right, back to the markets. Let's get to the markets. Euro. So the euro, remember, we're range bound. Upper end of the range triangle is 122.30. Lower end of the range right now is 121.40. So, and remember, these numbers are increasing and decreasing, because if you go to, let's say, 21.40. Let's see here. Let me go back to this. Here's your bias chart. 21.40. We're moving that up. because it is an ascending trend line, right? And so today support is going to be, or a resistance is going to be 122, probably 25. So this is 122.30 yesterday. Let's go over to the 4-hour chart. That's going to be, well, I guess we could stick with 30 because depending on where that trend line is being drawn at. So yeah, I'm going to say 122.30. Okay. Still range. Sterling, 141. And you know what we should mark up here right now? Well, actually, yesterday we did it. So we marked up 142, and that's really in the middle of this range. So if you look at yesterday's numbers, 142, 142.50, that goes true for today as well. 141 continues to be support. There we go. Here's your Aussie. You notice how yesterday we rejected the trend line resistance? Okay. And that held. We're testing that resistance right now. I wouldn't be surprised if we break higher, though. I would not be surprised if we break higher and push up towards the 78.20. You guys know that that's really key. And I'll just write 76.80 again for the 400th time in the last 2 weeks. $76.80, $78.20. Kiwi, resistance will be that 618 retracement again. Hold on really quick. Hey, Stelios, do you mind doing it while I'm on this webinar?
Sorry, doing what?
You can respond to Mark. It's fine.
Yeah. No worries. Yeah.
Okay, thank you. Here's the Kiwi. So the Kiwi, the underside of that trend line is 72.40. Okay, and that is going to be the 618 right there. We're still in range. That was the 618, and I think we marked that up yesterday. We said 72.45 and then 73 cents. I guess I should write 72.45 because I know it's 72.43, but this underside of this trend line is still, I think, valid, right? So I guess 40, 45, it doesn't really matter. Since we rejected it so well yesterday, I'm not sure if we're going to get above that today. Support, we'll just write down at 71.20 or 71. Dollar Canadian. Oh, we already got that. I'm sorry. Dollar Swiss. So look at the Swissy. This is pretty important because how many, like, imagine this. Okay. We have support that's been holding at 89.30, right? This is the neckline. And over the last couple of weeks, we have noted this 78% retracement. And I've always thought this needs to be tested. Wouldn't it be, doesn't it seem logical that this is going to happen? You break through this low, you test the 78% retracement at 89.10 and then bounce, right? It's not like we're moving out of range too much, but it's just going to stop out anybody who's long. So, oops, 89.10. And remember, we stay bearish while it's below the 200-day moving average, which is 0.9080, I believe. 70, sorry. US dollar, Norwegian krona. So here's the US dollar, Norwegian krona. We look like we're going to test this support. I know we said that yesterday and then we bounced off of here, but it still feels like that we're going to, and especially if the dollar Canadian continues to trade weak. I mean, and crude oil's, stays perched above 70. We should make it to 820. I think that is going to offer us support. And resistance is just, I know 842, but we should probably mark up this 829 as intraday resistance is going to be somewhere around here. Because if we can make it above here, then that opens the door back up to 842. So this is 829. So I'm going to do this 829, 842. Okay. And I'm going to keep it in range because remember, we came out of a wedge. So if you look at the daily chart, we came out of a wedge. We have not been able to break out to the upside. But this support is probably going to come into play as the dollar's, coming into play as well. So, and the dollar will probably end up being supported. Like you'll see the euro pop up to 122.30. Matter of fact, hold on. I need to put in entry order 122. I'm going to try to sell it in about 10 pips. I want to be short the euro roughly. So that's what I'm trying to get. I'm going to try to get a euro short off right here at 122.25. So that's where I'm trying to get short the euro. Just so you guys know, I'm playing inside of this this triangle. Oops, let me do that. Where are we at? We're at the dollar yen next. Let's get over to the dollar yen. Oh, I just skipped over the peso. I'm sorry. Dollar Mex. So the dollar Mexican peso 127% extension comes in at 1957. Steve's been calling for these lows around 1955. We're almost there. Good call, Steve. Resistance would be any move back up to this previous support, which is 1978. We got to keep it on range because this 1955 is going to be pretty important. Okay. Dollar yen. So we got to watch this dollar yen really closely here because if we take out this support, see, you got this trend line and this trend line. So 109.15 opens up 109 or 108.90. So I know we've been writing down support at being 109, but I'm going to write it down today at 108.90. Because if that gives way, then the dollar yen's going to come under pressure, and that means all the yen pairs are probably going to buckle under pressure too. So, intraday resistance for the dollar yen is 109.55, and then 110. So, Dollar index. So the dollar index is taking out this channel support. So next level support is going to be 89.60, as it has been. The big support. So we're probing channel support. So keep that in mind, guys. And what I think is going to happen here, especially if the euro spikes up to 122.25, we'll do this. You know, one of these. Resistance, that should hold us 90.25 for today. And then 90, I think it's 90.60, right? Yeah. Okay. S&P, same as yesterday. 42, 45, then 43, 4,300. 42, 45, 4,300. This continues to be bullish while we're above. I mean, really support is, 41.50. I mean, that's it. Here's silver. So silver broke that minor trend line that might allow for a retest of the underside of this trend line, which would also be horizontal support here. Be like right around here. So resistance, I think we wrote down resistance as being 28 yesterday. That's still resistance, maybe 28.20. We wrote down resistance at 28. I'm going to actually move that up to 28.20. Because that is the underside of this trend line and also that horizontal resistance. So that's where that resistance is at. Support is still 27. Gold. Same thing as yesterday. 1845. Remember, that's the 200-day moving average as well. Or 1842, but I'll just write 1845 because that's what we have been writing. 1845. And it's bullish while we're above that, and resistance is 1920, as you guys know. Last but not least, Bitcoin. So that 50% retracement in that trend line held. And, if you, hopefully, you guys are reading these updates, like this intraday update that was from 2 hours ago, said Bitcoin could bounce to the 53,273 level, which would be the trend line intraday and 50% retracement. This looking for shorts may find better opportunities. I meant to say those looking for shorts may find, I typed this. That's what happens at 3 o'clock in the morning when you're trying to send out an alert. So today's high, 35,450, and that rejected, but that's got to hold. So I'm gonna write. I don't want to write that down actually, because I think that we still could test the 36. What was that? 36,300. That's the 618 retracement, and also the underside of that trend line of the wedge. But that's got to hold for the bears to take control. And remember, it's bearish now that we're down here. I know we reversed yesterday, and if you remember the daily roundup yesterday, I was like, man, be careful being short. We're probably going to end up, if you remember the ping pong analogy, that was from yesterday, right? The ping pong ball analogy. I said, what I think is going to happen is you're going to see this ping pong ball, and every bounce is going to be a little bit lower, and then eventually it's going to, roll off the table. That's how I feel about Bitcoin. But that, means that we're bouncing right now, right? So support is going to be 30,000. Period. End of story. And realistically, we have to stay bearish while we're below the 200-day moving average. I mean, Bitcoin could be really just consolidating, this whole area. But intraday, if you guys are looking for shorts, I think anywhere between 35,000 and 36,000 will be like, best place to be on the short side. Okay. Anyway, that's it for the bias chart. So there you go.
I got it.
Hopefully you got that. All right. Steve, Stell, it's all yours. Good luck today because it is a sleepy summer day. But we do have the Bank of Canada in 20 minutes. So
indeed.
All right. So Steve, are you here?
Absolutely.
All right, man. Have fun. I'm gonna turn it over to you guys, and everybody have a great trading session. I'll see you guys in the chat room for the Bank of Canada.
Thank you, mate.
Thanks,
Bye-bye, mate.
guys.
Okay. Not much happens since FACE. Metals are rallying a little bit. One thing I didn't mention on FACE that's worth talking about is the Bank of England's Andy Haldane, who's the chief economist and the admittedly biggest hawk, said that, and I quote, "The UK economy is going gangbusters and it needs less, it may need less Bank of England support." And, if you think about it, the way monetary policy has been so accommodative for so long, and yes, I know we had COVID, but things seem to be, I don't want to say, oh, we're going great, the economies are growing, but I don't think we need the monetary support that we're having from Bank of England and the Fed and everybody. So somebody within a central bank actually has the cojones to go out and say it. The question is if the Bank of England is going to vote for something like that as a majority. And actually, interestingly, this just reminds me from the interview that we did with Mark Faber yesterday for Trader Summit, which we're going to publish, by the way, in a little while today. He said, I find it very strange that for years and years, the Federal Reserve, every decision is unanimous, right? There are no dissenters, which is what tells you a lot about how things work. But anyway,
Yeah.
we have a hawk in the Bank of England. We knew that. And he's expressing himself.
He's probably going to get assassinated in his sleep or something like that.
Yeah.
He's going to have a car accident.
Yeah, the brakes are going to fail.
Yeah. Mafia style.
Otherwise, make it look like an accident. Otherwise,
yes,
it's been quiet. We're waiting for the Bank of Canada and really waiting for the ECB tomorrow to see if we can get something that's going to liven up the markets. But I'm not holding my breath. What else is there to say? In the US, details, but the Senate passed a bill to spend, I think, $250 billion for manufacturing technology in the US. They're trying to make it compete with countries like China. And, there's fiscal stimulus which is coming, which definitely is going to help. The question is, when is when is stimulus too much, and what are the? I know short-term effects can be good. What are the more medium-term effects of that? But anyway, the government is doing what it thinks is right for the circumstances, trying to make the country more productive and more competitive. Otherwise, not much. Bonds are still rallying. I'm actually very happy that I closed my Bund shorts. What was it, week and a half ago?
Yeah, the timing was great. We were approaching that
support, right? We saw that
major
yes.
channel support. Let me pull it up.
And we've been talking about it on webinars here, on the chat room as well. And I have no doubt I am still looking to reshort, but not yet.
Yeah, so that was an excellent profit-taking position. Stelio, we've seen like a big rally since. Now,
Yes.
as I was saying previously to Blake, we're seeing this move lower in yields, but in my opinion, there is still no indication that it's anything more than part of this larger consolidation. So there is some more room to the downside, but I honestly believe that it's a matter of time before we see another push higher in yields. Now, as long as this this market remains under pressure, we should see some spillovers to FX, namely USD yen might feel the effects of that. For example, we might see a breakdown from this blue channel and produce another leg lower within some type of a broader consolidation here before we can continue to the upside. So this is the first market that I would expect to be affected. And in general, we've seen another attempt to break down in the DXY. Specifically, we're now trading very, very close to this trend line support from this little channel. We actually tested it earlier. Of course, inversely correlated, we're seeing the exact same thing, but inversely in the Euro USD. So Euro USD testing this trend line resistance. USD Swiss might be leading because it's one pair that shows a breakdown of the dollar. So as we said earlier, you said that you don't short a quiet market, and we know very well that what is well correlated with markets that are performing well, dollar underperformance. So that's what we're seeing. And as the USD Swiss might be leading the major FX pair world, at the same time, in this case, we might have the IWM leading stocks, right? Because the IWM seems to have broken out since the day before yesterday out of this symmetrical triangle that we spent quite a lot of time consolidating in. I remember us even some time ago talking about that. Somebody asked if this is a head and shoulders formation, and they gave the usual answer, which is yes, it can be a head and shoulders formation if we break through the neckline, but you should always consider the likeliest scenario. Your main scenario should always be the one that aligns with the trend. And the trend was clearly to the upside. I mean, undeniably, right? So I explained why my main case scenario was the symmetrical triangle interpretation. And the fact that we've now broken higher is proof that probably that was the case. We're now very, very close to the all-time highs at 234.50. I think the chances that we're going to break through that are extremely high, in which case I would be looking for upside targets like 242 and 251 equivalently. Now, I know that the S&P and the NASDAQ, still leave open the possibility of a more complex correction. But as I've said before, that doesn't really mean that you really need to try to fade them. Of course, there is the risk reward opportunity to do so, But if you're doing so, you need to be cognizant that this is a counter trend position. So, you should take appropriate measures having to do with your, risk management, your position size, so on and so forth. I cannot, give you more information. Each person, is responsible for their own trading account. I can just, give you some general guidance, my perspective. And after that, you're the masters of the ship.
Steve, before you continue, I want to
Yeah,
answer a question. Our friend Mark
absolutely,
is
Steve.
saying, is there a relationship between gold and 10-year rates? The
Of
markets will
course.
actually move. There is a short-term inverse relationship. So as yields go up, metals go down. But really what we should be looking at, as Steve has said over and over again, is real rates. That's
Real rates,
the
exactly.
proper relationship. And that is also relatively short-term. In the long term, or medium to long term, in my opinion, the only thing that will drive metals prices is supply. So supply has been pretty constant, unless they mine.
Speaking of that, Stelio, and we're going to have
let me just finish what I was going to say, because I'm going to forget it. Supply, and unless they mine an asteroid, supply is going to be pretty constant. And B is the expansion of monetary supply. As long as you have monetary supply going to the moon, eventually anything dollar denominated is going to go up, unless, as I said before, the supply of it changes. Anyway, sorry, carry on, Steve.
No, I'm sorry. Having to do with supply, we know that the supply of gold on an annual basis is around 1.5%, which is a very, very slow, healthy pace of increase of supply. And especially if you consider that population is increasing, so equivalently, like the demand for gold from one direction or the other is increasing. I think somebody can realize that this type of supply is not quote unquote inflationary in nature, right?
Yes. Plus the total amount is finite in the earth, right? So you go up,
Absolutely.
1-2% per year. At some point, it's going to become really, really difficult to mine anymore. But
exactly, you just mentioned it. An extra element as well, which is, the more time passes, the harder the remaining supplies are to be mined, meaning more costly, right? So, for example, if gold price or silver price were to drop significantly, we would see a significant decrease in new supply coming in. Why? Because many of the mines and the existing mining facilities would be uneconomical to continue functioning at low prices, right? So that on itself is also something that puts constant upward pressure over a long period of time, of course, right? It doesn't affect prices in the short term, but it does and will affect them in the very long run. So it's another factor, along with the actual monetary inflation that we have, that should keep prices of precious metals in an appreciating trend.
Yes,
over time.
and to continue on that, real rates, we're always talking about yields adjusted for inflation. So you want the difference between the actual yield minus inflation. So when you have inflation ticking up and the yield is constant, then you get more and more negative. I mean, at the moment, inflation is higher than, say, 10-year rates. So you have negative real rates. These, the more negative, or let's say that the smaller this numbers become or more negative, then this is better for metals. The more positive this number becomes, then it's worse for metals, simply because having bonds will give you a real yield, right? If they're above inflation. So if 10-year is yielding 10% and inflation is 5%, you're making 5%. So that's a real yield that you're getting. And as we all know, gold doesn't give you any yield. Well, yeah, you can actually lease it.
So it's the usual thesis of anti gold people, that it's the opportunity cost. The opportunity cost that by holding gold, you're not getting the income you could get by investing in something else. But if that something else is government bonds, they've been negatively yielding for such a long time that it's not even funny to do. And another factor that I've mentioned several times in the past is taxes. Don't forget, Stelio, that actually the nominal yield you get in bonds in the vast majority of the cases will be taxed. So
Of course.
the actual remaining nominal yield that you get is even lower than what's printed. So you have like a 20-30% tax rate. That means that a nominal 2% yield is going to be 1.3, 1.4, 1.5% left over, minus inflation. I mean, and we're not even at 2%. We're currently like approaching 1.4%. So yeah, real yields are very negative, especially if we consider real inflation, because the reported inflation unfortunately has nothing to do with real inflation. But even if you take the reported inflation into account, we're still deeply in negative territory. So that's all you need to know. Now, having to do with the VIX, VIX is not confirming yet in the very, very, very short term. We see a little bit of a divergence, but you shouldn't pay so much attention to it, because we've seen in the past and we know that the VIX can be diverging for a significant period of time before this divergence can actually play out in the index. So keep that in mind. I mean, and I'm saying that in advance because I know that a lot of people frequently mention the VIX or the VXN or whatever volatility index, based on whatever index you're looking. And they're mentioning divergences as a possible indication that we might see a sell-off. So that should not be on its own some type of a market signal for you. In combination with a number of other factors, it can be, but on its own, I think it doesn't mean much. Now, Stelio, I don't know if you've noticed, US indices seem to be very well bid. We do have some negative price action in the DAX today. So I'm monitoring this because I'm kind of curious if we're going to find support again in this area, which was previous resistance, by backtesting it as we speak. Or perhaps it's a different type of formation we should be looking for. Perhaps we're forming some type of an ascending wedge, in which case we still might need more time for this to play out. I know there is some RSI divergence here. I know also the obvious fact, we've said it many times in the past, the euro is currently well bid, and a strengthening, I should actually say, currency always acts as a headwind to the index. That doesn't mean that they move inversely. It just means that there is an effect. So, strengthening of the euro has somewhat of a negative effect, let's say, in the DAX and other European indices. While, let's say, if the euro was weakening, it would have, a positive effect. So, but in any case, I'm monitoring what the DAX is doing here. I don't really believe that something dramatically has changed. I mean, the DAX is also in a very, very strong uptrend, and it has actually spent quite a lot of time in the recent weeks overperforming the US indices. Now, pullbacks on occasion are healthy. I wish we had more than pullbacks, because these markets, have been contained in creating like very shallow pullbacks recently. In any case, here's the FTSE as well, by the way. I think FTSE looks rather bullish. Some type of a triangle here. So what else did we have to talk about? Yeah, metals. Now, let me start from crude actually. So crude, unstoppable. It still keeps pushing higher. We've now cleared the confluence of resistances at 69.50. Not surprisingly, if you remember, I did say that I don't expect this confluence of resistances to roll price over. We're now approaching the 127% extension of the triangle we had over here. That's at almost $71. I do think that we're probably going to clear that resistance as well and head probably towards 72.5. I wouldn't be surprised even if we made it closer to 75. But one target at a time. Next target in this case is 71 and then 72.5. Clearly the trend remains higher. No reason why you should try to fade it. Now, gold still consolidating, silver still consolidating. You see, we've spent quite some time near the highs, as I've said before. For me, a real technical development will be breaking through this 2870 something area. That's the triangle trend line resistance, previous high there as well. Other than that, everything else is noise within the triangle. I don't find it unlikely to even pull back a little bit more prior to actually breaking out. But my thesis that precious metals are looking really good, and they should continue to the upside hasn't really changed. And there's no technical reason for it. There's no fundamental reason, obviously, but there's also no technical reason to believe otherwise. What else? Now, the rest of the FX world, Blake showed the USDMXN that is approaching the lows. If you notice USD NOK approaching this trend line support, USD CAD, I know that we have Canadian data extremely soon. What is it, in 5 minutes, Telio?
2.5 minutes.
Okay, so 2.5 minutes for US data. Canadian data. Yeah. So let's see. I'm not making the statement that technical formations predict financial data, right? But I'm going to tell you that from experience, it's more frequently than not that financial data are usually the catalyst of formations to break, and they usually do tend indeed to break in the direction of the trend. So I don't know what we're going to get from Canada. I literally don't know. I obviously can't predict, but I wouldn't be surprised if whatever we get ends up being the catalyst for another break lower and another continuation in the direction of the trend. USD NOK is near that level, USD CAD is near that level, so let's see if USD CAD can be the next one breaking through. Now, Aussie Kiwi, nothing has really changed there. Cable, nothing has really changed there. You can see we are in some type of a consolidation, very close to the highs. The more time we spend consolidating near the highs without the bears actually managing to take control of this and pushing the pair lower with some momentum, the higher the probability that we're just going to continue higher, right? So keep that in mind. 1 minute before the release. Okay, so let's see what we get from Canada. Dale guest said that silver will go to 75. I agree. I think it's yeah, exactly. It's an inescapable reality that silver is going to go to 75. The question is when. How soon is it going to be? Because it might not be soon. Let's be honest, right? I do believe so, though, that the next time that silver is going to test 50, it's not stopping there. Because the previous time it tested 50 was the second one and we got rejected again from 50. I think the third one is going to be the charm. So I think the third one was just going to be breaking above 50.
Okay, we have Bank of Canada. Let's see.
Use the CAD for our chart.
Okay, they kept rates unchanged, obviously.
Yeah, let's see what we get with it.
USD CAD going down a little bit. Yeah.
Rates unchanged. Let's see if we get something accompanying
Weekly bond purchases maintained at 3 billion target. So from what I see, they haven't done anything new.
3
But the
billion.
USD CAD is going lower.
Cheap bastards, 3 billion. I
3
mean,
billion.
come on.
What's 3 billion among friends?
Yeah, I mean, come on. Put a zero there. Make it 30. Just do something to move the needle. We don't have enough monetary expansion globally. Anyhow, USD CAD just, you know, so
It's
far
not doing anything now.
So far, absolutely a non-event, right? Yeah.
Yes,
so far, a
let's
non-event.
move on. Yeah.
Okay. In any case, what remains true in this case is that this is another consolidation in a well-established downtrend, which means that the chances are higher for a break and continuation lower. You know, as simple as that. Okay, so yeah, I think that's it. I mean, not much more to say in a day that has been rather quiet. Yes, we're seeing some dollar weakness, which is, to be honest, nothing surprising there. We're seeing US indices, remaining rather well bid, maintaining their gains anyhow. So, so far no fireworks, so not much to say. Any questions, guys, girls? PL, PASI, nothing has changed with any of that. I mean, we covered already two of the metals having to do with platinum. I told you before, I think it's in the short term, it seems to be the weakest one. So I would like to see a move towards 1040. Palladium is still in some type of a corrective move. I think it's a matter of time before it continues higher because the move has clearly corrective characteristics. SMH, no change here. Nothing to say here, you see. Unchanged. Anything else? Guys, girls, anything else you want to say? Bye-bye, Alexander.
Okay.
Going once, going twice. Okay,
Sold.
so sold.
Okay.
See you all tomorrow. Bye-bye, Stel.
Thank you, everybody. Thank you. Bye-bye.
Bye.